Hello, good morning, and welcome to another live technical analysis session. We're going to be starting off with the euro against the US dollar. So, simply looking at the chart, we could attribute the pair's movement to a few scenarios. One could have been the release of the FOMC's meeting minutes yesterday, which implied that Fed officials may have been worried about interest rates remaining higher for longer. Now, that in theory should have weakened the euro as the dollar strengthened. Yet it appears overall across the board, those comments did not have a significant impact on the US dollar, as such, allowing the euro to capitalize on that. So France's services PMI figure came in better than expected, yet Germany's manufacturing PMI figures came in lower than expected, potentially counteracting one another. Now it appears that the euro is moving in an upwards fashion regardless of that. Note how the bullish candle wicked up to our R2 level of 1.089. It's broken above our R1 level, which is now resistance turned to support. So we would maintain overall a bullish outlook for the particular pair, given that it's broken above resistance turned to support. The RSI is above 70, well, it's at 71, so implying a bullish market sentiment for the particular pair. Despite the lower than expected PMI figure for Germany, which might be a bit of a concern for euro traders, overall it appears that the dollar has weakened and the euro has strengthened, allowing the euro to capitalize on a weaker dollar, and with the euro strengthening, moving in an upwards direction. Our target now would be R1 at 1.0890. I'm simply readjusting our support levels to reflect today's price movement. So old S2 becomes S3. So you have already our support and resistance levels, which we had placed yesterday together. So this would be R1, and it's validated as R1 because of this wick, which came up, failed to break above, open lower. Despite this, we would still maintain our bullish outlook for the reasons I mentioned before: strengthening euro, weakening US dollar, upwards moving trend line as well, continuing to be validated, RSI 71, so bullish market sentiment. But now we would have to find our resistance level at R3. So we have a few scenarios here. One could have been here, yet that's way too far from R2. And as such, this could be a future resistance level, but a more immediate one could be in between this bearish candle and then the opening of this bearish, and slightly near these two candles as well. So it appears that there, at this point in time, there was heavy resistance. So somewhere roughly between 1.10638 and 1.10652. Roughly around here, I would expect a resistance level to be formed should the price action break above R1 or 2 and then take same for R3. But for now, we're going to be taking this bearish candle, validated twice. We're slightly neglecting these two candles, but that's all right. As we said, somewhere around here, there appears to be resistance. And we can keep this at 1.1065 for R3. So you have R1, R2, and then let's place R3. We're going to be looking at the on balance volume as well. So you have S1, S2, S3. Let's move this. Let's change the text label for R3. So R3 1.1065. Now we're noting the personally, I would look at Minneapolis Fed President Kashkari, who is due to speak in tomorrow's Asian session, so that may have an impact. In terms of the British pound, if I'm not mistaken, BOE Megan Green spoke approximately about an hour ago, perhaps an hour and a half. Her statements could be perceived as hawkish, so she doesn't see a reason for cutting rates currently. So hawkish rhetoric, providing some support for the British pound. Once again, also capitalizing on a weaker US dollar. So in terms of S1, I bring it to this, I'd say relatively old, well, recent high, although this was on the 19th of February, so fairly recent. We're adjusting our support level, 1.2645 as S1. then S2 1.2580, then S3 1.2445. So let's adjust our text labels as well. 1.2645, 1.2580 for S2, S3 1.2445. That's S3. Resistance. We have resistance fairly high at 1.2760. I'll be keeping that resistance level. RSI is at 66, so bullish market sentiment for the particular pair. R2 1.2870, though the distance between S1 and R1 is fairly significant. So, well, I'd say it'd be prudent to bring R1 slightly lower, but if you look at this wick here, then S1 is R1 would be too close to R2, so we're neglecting that. We'll keep R1. Bullish outlook being maintained. You have an upwards moving trend line that hasn't been broken, still moving higher. You've got RSI. You've got the Bollinger Bands being tilted towards the upside. So we'll keep R1. If it fails to break above R1, we could maintain a sideways bias. So potentially going short at R1 and staying in between this range, forming a sideways moving channel that we had previously, as you can see from this price action here. For now, bullish outlook. We're maintaining a bullish outlook. And for it to continue, it has to break above R1. Now let's also find our resistance level at R3. So for R3, we could take this old high, 2 candles validated. So price action dropped below, came back up, found resistance, so sell orders and moved lower, came back up to R2, moved lower, and then formed R1 that we currently have. So R3 would be at 1.2990. Now, some of you may be wondering, well, why are we keeping such a large distance between our support and resistance levels? Well, it could be also used in the future. So this chart could be validated for the next week or so as well. If it breaks above R1, could aim for R2, and so on. R3, 1.2990. We'll also be looking at NVIDIA later on during this session. So I have support, S1, S2, S3, upwards moving trend line, broken above support. Bearish candle, if it does come back down to S1, not a surprise. If it continues moving higher to R1 for a bullish outlook to continue. But overall, bullish outlook for the particular pair. Dollar CAD. We can see that the loonie is strengthening against the US dollar. Note how it's actually on our S1 level of 1.3450. But before I do forget, let's add our on-balance volume indicator, which assigns a positive or negative value to the volume of each session. So it's moving in upwards. Trend appears to be moving in upwards direction. You have the RSI and OBV also validating that hypothesis. So maintaining a bullish outlook for the euro. USD CAD resting on S1. If it breaks, it's broken below our upwards moving trend line. So there's 2 scenarios I would be looking at. One, which is the predominant one, bearish outlook, breaking below S1. Next target being S2, 1.3320. Further than that, 1.3185. Now, why would I keep a predominantly bearish outlook? As it's resting on S1. Take a look at the RSI. It's at 35. There is a strong bearish market sentiment. It's broken below my upwards moving trend line. So the 2 predominant scenarios would either be sideways between S1 and R1 or bearish. And the way I'm looking at it now, if it breaks below S1 with the RSI, which appears to be the case now, I would maintain a bearish outlook for the particular pair as the loonie appears to be strengthening. We're also noting that the retail sales rate for Canada, which will be released later on today, which are expected to improve and as such could provide further support for the loonie. Now, from a more general point of view, we have a high number of financial releases due out to be released today. They're all implying that pairs, that the Canadian dollar, the British pound, the euro are all going to be strengthening against the US dollar and that the US dollar might weaken. For example, the weekly initial jobless claims figure is expected to come in higher than last week's figure, which could further weigh on the US dollar. As such, overall for today, I would expect the greenback to weaken based on the projections by economists in terms of financial releases, which are expecting the US dollar to potentially weaken. Aussie, upwards moving direction, perhaps attributed to the measures made by China in order to boost their local economy. So, given their high frequency of trading between these two nations, if China is doing better, then Australia might be doing better as well. So, higher demand for the Aussie, upwards direction. Corrected slightly below our upwards moving trend line, yet came back up. RSI 64. All signs point towards a bullish outlook as long as it manages to break above our R1 level of 0.6600. So for that, we have to break above. For support, we could even bring S1 slightly higher now with the price action moving higher at 0.6505. So that would be our new S1. So simply bringing it slightly higher. S1, S2, S3. You've got R1. Bullish outlook to continue. Would have to break above R1. Take same for R2 at 0.6725. In terms of oil, relatively sideways fashion being maintained between S1 and R1, narrowing of the Bollinger Bands. Now, interestingly, the RSI is at 59, so close to 60, which might imply some bullish tendencies. Yet, the narrowing of the Bollinger Bands, the smoothening of the moving average lines, the 50 and 100, appear to be supporting the case for oil moving in a slightly sideways fashion. We're noting the API weekly crude oil inventories. Now, the inventories figure is anticipated to be lower than the previous reading, so last week's, but it's still an increase in inventories. So, potentially implying a reduction in demand for oil as oil inventories continue to increase. So relatively sideways between S1 and R1 in terms of oil. So staying in between this range, potentially shorting R1, taking profits at a level you might decide on yourself, or perhaps if it comes back down to S1, potentially going long. But that depends. As long as it moves between S1 and R1. Now, we should keep an eye out on the RSI and also note that we might see the formation of an upwards moving trend line. So, for an upwards moving trend line to be validated, you need two touches. A third confirms that it is indeed an upwards moving trend line. So, for now, we would maintain a sideways bias as long as it doesn't break above R1. And we could also add the CCI index to see if this is overbought. Commodity channel index, let's see, indicators, uh, oscillators, CCI. So it's still in between the CCI. So note, let's look at here. So here it was oversold, corrected. You can see right around here. Overbought, came back lower, oversold, came back in between. So it all points towards a relatively sideways bias for the particular commodity. So for oil. So it maintained a sideways bias for oil. Now in terms of fundamentals, you could attribute perhaps some support to oil prices from the continued strikes by Houthi rebels in the Red Sea or the potential possibility of a war between Azerbaijan and Armenia could also provide some boost to oil prices, although that does not appear to be seen in the market price currently. In terms of gold, upwards moving trend line, we could draw a second upwards moving trend line right here. So there's two touches. Now this is steeper, so a greater rate of acceleration. If it breaks below this upward moving trend line, does not necessarily mean that it's moving in a sideways fashion, as long as it doesn't break below this point here. Overall, bullish outlook, RSI 61, some bullish tendencies, but it would have to break above R1 for that to be maintained. If it does not, breaks below both upward moving trend lines, switch to a sideways bias between S1 and R1. We're going to be looking at NASDAQ. So NASDAQ yesterday, after the market had closed, reported its earnings. Better than expected revenue, better than expected earnings per share, as we had anticipated. But what is interesting was in the company's earnings call, they noted some concerns about demand and growth from China. So if you look at their earnings transcript, it was growth grew at all sectors except China. So that's a concern about the company's potential revenue in the future. Now, given that it reported earnings after the close, this is not reflecting the current post market price action. So this was what it closed at yesterday. So when the market opens later on today, it could actually break above R1. I would expect it to open right around R1, perhaps near R2, depending on how that moves. We would have maintained a bearish outlook, but with the earnings better than expected, we would switch towards a bullish outlook. We'd have to see where it opens. Target R1. If it opens above R1, then you've got R2 and then R3. If it opens above R1, this would be resistance turned to support. If it manages to break up, open above R2, support. Now, once the market opens and the price jumps higher, it would not be surprising to see an immediate market correction slightly lower before continuing its ascent. So we would maintain a bullish outlook based on the better than expected earnings, and that would be interesting to see once the market opens. Look at the Nasdaq. It recovered, so it broke below our upwards moving trend line, but still, it's aiming for R1. But I wouldn't be bullish on the Nasdaq. Instead, I'd opt for a sideways bias between S1 and R1. Why? It's broken below our upwards moving trend line. Regardless of Nvidia's earnings, there appears to be some concern. As such, staying between S1 and R1 for a sideways bias and the narrowing of the Bollinger Bands. It could come back up to test R1 before staying between this sideways moving, I'd say, channel if it comes back down to S1. So S1 and R1 sideways, staying between these two levels. If it does manage to break above R1, then we could continue on a bullish outlook. If it breaks below S1, immediately switch towards a bearish outlook. For now, however, RSI 59, some bullish tendencies, but still sideways between S1 and R1. In terms of Boeing, some news agencies are reporting that there was an issue on the wing of a plane. Now, that's only been confirmed by one source. And as such, in order for that to potentially impact the company stock price once the market opens, we would like to see more news outlets reporting on such a scenario and potentially validating that report. If they do not, we may not see an impact on Boeing's price, but if it is further reported, bearish outlook for the company. Overall, we've said this time and time again. There are concerns about quality control for Boeing aircraft. That concern appears to be validated week after week after week. I would maintain a bearish outlook on the company stock price. Downward moving trend line, RSI 36, bearish tendencies, Bollinger Bands tilted towards the downside. So it has to break below S1 at 200.45 for our bearish outlook to continue. If it does not, sideways. I would not be bullish on Boeing. Too many issues, too many bad news coming out for the company. But in the event that it does manage to break above R1 at 216.25, then you might switch towards a bullish outlook. But still, bearish in my own personal opinion. Bad news, bad quality control, weighing on the company stock price potentially once the market opens. S&P 500 bounced off S1, 4,950, taking aim for R1, 5,100. Still, RSI 63, so some bullish market tendencies still exist. If we extend this upwards moving trend line, still validated, so one could maintain a bullish outlook on the S&P 500. But overall, I'm still slightly concerned. The minutes implied that the Fed may have to keep rates higher for longer, yet we're seeing no significant impact from the side of the market. So it was released at 9 p.m. GMT plus 2. That was 11. Look at that at 9:05, but then immediately reversed. So despite that, it's a bit of a concern. It's moving slightly upwards. I wouldn't maintain a bullish outlook, but the technicals imply bullish tendencies, and I would have to switch towards a bullish outlook if it manages to break above R1. If it does not break above R1 and fails to break above 5,100, sideways bias between S1 and R1. If it breaks below S1, immediately switching for a bearish outlook, taking aim for S2, 4,800. Now, we're also going to be looking at, we could look at ExxonMobil. Very nice price action, 60 on the RSI, bullish tendencies, upwards moving trend line since the 19th of January, testing R1, 104.78, precisely as we had placed. So if it does manage to break above R1, switch for a bullish outlook on ExxonMobil, taking aim for R2 at 109.10. But if it does come back down, sideways bias between S1 and R1, if it breaks below 100.60, which is also a psychological figure, bearish, taking aim for 96.40. Let's also look at Disney, Airbnb, Coca-Cola. Coca-Cola moving higher. Bullish outlook, broken above R1, 60.95. RSI at 70. Looks good. Taking aim for R2 at 62.23. We'll adjust our support and resistance levels in just a moment. Personally, I'd like to have a look at Tesla. The concern about the Cybertruck may be preventing the company from moving much higher. RSI 52, sideways bias between S1 and R1. Bullish outlook would have to break above R2. Simply breaking above R1 would not be sufficient for a bullish outlook. It would have to break above R2. If it does not, sideways between S1 and R1. If it manages to break below S1, bearish outlook taking aim for S2 at 152.65. Let's have a look at something else as well. So we're keeping our support and resistance levels. Boeing appears to be validated. Nvidia, yes, we've done oil. Let's see if we've forgotten something else. Euro, JPY, USD, JPY, sideways. Narrowing of the bullish bands, very narrow as well. Low market volatility. RSI 51, S1 and R1 are the boundaries that are confining the current price action. So the way you'd like to trade this is up to you. But what I'm seeing here is sideways between S1 and R1. S1 is close to S2. Still not an issue because it's narrowed. There's low market volatility. So staying between S1 and R1, sideways fashion. We could also add we're not going to add the CCI. We could look at OBV. Let's see. There's something worth. Let's actually add volume. One could say decreasing volume as well. Validating this as well. Let's look at volume as well for the euro. Keras volume. There we go. Okay, not too bad. This might be. It's moving slightly downwards, so that could mean that the momentum might be slightly waning. That might be a bit of a concern for the bulls. But overall, from a technical point of view that we had discussed earlier on, appears to be bullish, but would be closely watching volume as well. Now let's look at BPM, UBS, the Kiwi, ARM, Disney, Airbnb, Coca-Cola. What else do we have today that might be interesting? Let's have a look here. Show everything that we have. Do Google, Facebook, Yahoo, Bank of America. Let's do Bank of America. Now, there is a reason as to why I've decided to do Bank of America today. If you look at the minutes that were released by the Fed, they're slightly concerned about the banking system. Some policymakers said that they may warrant higher caution or higher degree of monitoring. So the common phrase, the banking system is sound and resilient, has been removed. So a bit of a concern for the banking sector. Might not be Bank of America, but we do have Bank of America on our MT4 platform, and as such, we're going to be charting it. Now, if we have the same scenario that occurred last year with First Republic, SVB, etc., it could actually weigh on Bank of America as well. Why? It's a bank, it's in America, could also have a spillover effect into this company's stock price. Now, let's talk about these support levels that I've just placed. Now, from a first glance, looking at the right hand of the screen and ignoring this, I saw this candle, these two candles. The third validated. I wouldn't place it here at this bullish candle. It's too close. Look at how it's moving. I'd give it some space to breathe. So, traded low, but didn't manage to. So, found support, moved higher. And then if you look back, this was a gap that has now been filled, but still it was a gap. So it came back down. So you've got buyers at this point that you had, came back up. When it came back down, potentially buying once again. So that's a support level. Now, second support level is this wick down here, 31.24, and then lower than that. So we're trying to keep an equal distance between our support levels as we do on every live, not the price action, finding support at this point before moving higher. So this, for me, is also a valid support level. Now, in terms of resistance, have a look. Where would I be placing resistance? There are two possibilities that I place resistance at. I think that's enough time. One, two. I'll be neglecting this. Why? More recent price action, multiple attempts to break above, failed. Also, 34.05, R1. Multiple price action, failed to break above. Same story, the buyers and the sellers. So they bought, and then you've got old sellers selling potentially here as well. So that's my R1. Now you might be wondering, R2? No, too close to R1. Look at the distance between S1 and S2. I wouldn't be placing my R2 here. I'm not saying you might not meet resistance here. I'm just saying that from a slightly more macro perspective, be more prudent to place R2 slightly higher, not that close to R1. Because if it breaks R1 and then immediately breaks R2, what's the point? R2, let's also measure the distance between for A. Well, close enough. Let's see. No. This is my R2. Now, you may not be able to see what I'm doing precisely, so I'll just zoom in. I am trying to place my resistance line between as many opening and closing candles, so the opening and closing figures of candles, as possible. So you've got 1, 2, 3, 4, 5, 6, 7, and 8. So I think this is more of a significant resistance level. Had I simply just taken this, which had 2, maybe a third. There's a lot of selling pressure at this point. It looks like it. It came back down, came back up. This was potentially old support, which was resistance turned to support. Here, broken, came back up, then turned again to resistance, validated on 3 occasions, or let's say 4, before moving lower. So that for me would be resistance R2. Then R3, back to the basics. Old high. I wouldn't take the wick. I'd take this candle, so the closing figure of this candle. Note this wick, tried, found resistance, moved lower. So I've got R1, R2, R3. And let's just make this 36.75, rounding it up. Psychological impact as well, 35.55. So that could be your R2, 35.55, not 50. And then you've got R1, 34.05, 31.25 for S2, 29.45 for S3. Now, how many of you might be trading 29.40, closer? Might be trading Bank of America. I do not know, but might be interesting. If we have concerns and then continuation of potentially a banking crisis, then all of these stocks might come into play. So we'll have our charts ready, prepared just in case, because you never know. For S2, 31.25, as we said, 31.25. $29.40. R1 34.05. Thank you very much, Viva, for your kind words. 35.55 for R2. $36.75 for R3. So most of you might ignore this chart, but just in case in the future, if we've got issues with the banks once again, this might come into play. So we've kept that. We've got Nvidia. Then we have Netflix and Apple. Apple has broken, but has it broken? See, that's the issue. And then you see it's validating still this upwards moving trend line. But if you look at another point in time, downwards moving trend line, lower highs, lower lows, RSI 37. Now with Apple, it's an interesting story. Their mistaken vision, so their headset that they made appears to be gaining a lot of publicity and use case, etc. So could potentially increase sales, but it's a very steep price. So if I'm not mistaken, $3,500, which make it unaffordable for the majority of the consumer population. Spending 3.5K on a headset might be a bit too much. So sales might not be that big, but it could be an investment in the future for Apple. So generating interest, potentially coming out with a cheaper version in the future. So could provide some support for the company stock price. For now, staying between S1 and R1. If it breaks below S1, 179.15, switch towards a bearish outlook. Bit of a concern with the RSI at 37, applying some bearish market tendencies. Worth keeping an eye out for sure. The Dow Jones sideways between S1 and R1 hasn't broken above R1. RSI 59. If it drops back down to 50, further validating our sideways moving hypothesis. We've done oil, we've done gold, we've done the Aussie, we've done the CAD, British pound. So we've done all of them. We've done Boeing as well. Nvidia, Apple, Tesla. We could remove this. We could remove R1. We could have a bigger area to potentially um, see where the price action moves. Might be a bit more prudent to have removed that R1. I'm keeping R2, 207.70, or valid. And then for R3, 3 candles validated 262.85. A bit far away from R2, granted, but still significant resistance. As you can see, came back up, failed, moved lower. So 262.85 it is. 207.70 as R1. And then you've got R3, as we said, 262.85. That's my R3, sideways between S1 and R1. If more and more customers are complaining about the Cybertruck, could potentially weigh on the company's stock price. Let's see, IBM, some mobile, Facebook, BP, British Petroleum. All right. Came back up, support 468.10. Tilted towards the downside. RSI 50 though. If it breaks below S1 again, bearish outlook. Does not, sideways between S1 and R1. Wouldn't see a bullish case for now. But if it does break above R1, then we would switch for a bullish outlook. New Zealand dollar against the US dollar. Note how it's aiming for R1, 0.6215. Upwards moving trend unvalidated, RSI near 70. All implying a bullish outlook for the New Zealand dollar. For that to continue, we'd have to break above R1, taking aim for R2. For a bearish outlook, simply breaking below S1 would be sufficient. Let's look at ARM as well. So we're going to be keeping our sideways bias for ARM, but we're just going to be readjusting our resistance level slightly higher. So we had it a bit too close, 126.15. Still sideways because it didn't really break above R1. just fluctuating between. So perhaps our resistance level should have been slightly higher. RSI 50, S1 and R1. So staying between this range, potentially. That remains to be seen. Disney, if it gaps below, this would be an island reversal formation. Airbnb, done Google. Let's see if there's another interesting one that we could potentially do. We could do Ferrari. Pre-season testing for F1 has begun. So let's look at Ferrari and the company stock price, not their car. So for support, might be a bit difficult, but it's around 390.31, I'd say, for S1. Then for S2, I'd bring it lower, 371.10. But then I'd have to place a 3 at this, where it gapped up, 353.10. If I'm not mistaken, that's all-time high. Yes, it is. So now we shall extrapolate the distance between S1 and R1. Excuse me, S1 and S2. And then we will be placing our resistance level. So 1,900. 409. Let's just round that up. So 409 is R1 for Ferrari. Ticker race. Then 900. Then let's just keep that. For let's say 428 for R2. And then for R3, 448, not 4,000. So I have R1, R2, R3. I've got my support levels. Now let's just fix our text labels, make them slightly larger so that it's easier for you to see where our support and resistance levels are. So 448, then 428 for R2. R1, 409. Now, if you look at the RSI below our chart, which I'll actually zoom in for you to see, make that slightly bigger. If you look at the RSI, it's at 72, so implying a bullish market sentiment being maintained. So that's R1, S1, 390.30. 371.08 or 10, 371.10. It's a bit bigger. $25. There we go. So you've got S1, S2, S3. You've got R1, R2, R3. Now, if we draw an upwards moving trend line as well, validated, you've got 1, 2nd, and then if we just readjust, perhaps a 3rd touch, slightly, but 2. Upwards moving trend line, RSI 72, aiming for R1 409.00 at its all-time high. Bullish outlook for the stock price of Ferrari, aka hashtag race as their ticker. If it breaks above R1, next potential target R2 for 128.0. If it breaks below our upwards moving trend line on S1, we could switch for a bearish outlook, taking aim for S2 at 371.10. Lower than that, you've got 353.10. If it breaks above R1, R2, potential target being R3 448, but would need a significant support for it to actually reach to R3 within a day's trading session. But for now, that appears to be it. Thank you for watching, and I'll see you next time.
Everyone, my name is Emily. We've already looked at margin level and margin call level in our previous videos. Today we'll be looking at stop out level. The stop out level is when the margin level falls to a specific percentage in which one or all of your open positions are closed automatically. This happens because the trading account can no longer support your open positions due to a lack of margin. Basically, the stop out level is when the equity is lower than a specific percentage of your used margin. If this level is reached, your broker will automatically start closing out your trades, starting with the least profitable positions in order to free up margin. The stop out level is calculated according to the specific level set by the broker, your trade size, leverage, and equity. If the stop out level is set to 50%, this means that once your equity falls to 50% of your used margin, then a stop out will be triggered. The easiest way to avoid unexpected stop outs is by applying good risk management techniques. For example, you can set stop losses, limit exposure, and you can also top up your account equity to increase your margin level. Hope you found this video useful and stay tuned for more educational videos.
Okay, thanks for waiting, everyone. Let's go ahead and get started. So welcome to this week's webinar on the second part of our Fibonacci series, which will be on Fibonacci extensions. So before we get started, as per usual, a risk warning. our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here is our agenda for today. We will do a brief recap of the Fibonacci retracement essentials that we went through last week. And then we'll look at ideal market structure. So what are considered significant swings, how you can follow market trends, and then the different Fibonacci retracement levels, followed by this week's Fibonacci extension slides. So then we'll look at Fibonacci confluence and how you can combine what we learned last week, so Fibonacci retracement, with this week's extensions. Okay. Feel free to let me know in the chat throughout the webinar if you guys have any questions. Let me just change the settings so that you can ask me in the chat or Q&A. Okay, should be okay now. Okay, so let's get started. So starting off with a quick history lesson on the origins of Fibonacci. So Fibonacci retracement levels were named after Italian mathematician Leonardo Pisano Bigolo, who was famously known as Leonardo Fibonacci. So, however, he did not create the Fibonacci sequence. Instead, he introduced these numbers to Western Europe after learning about them from Indian merchants. So Fibonacci retracement levels were formulated in ancient India between 450 to 200 BCE, and the sequence is also referred to as nature's numbering system. It's often observed by known people in flower patterns, hurricane patterns, and galaxies. So here's our recap on last week's Fibonacci retracement. So a very simple checklist to follow when you're first starting out with Fib retracements, and I guess some things to look out for. So firstly is the market structure clear. So we want to look for big zigzag patterns, and we'll show you some examples in the coming slides. Next, we're looking for recent trends. So we want to identify, is the trend going up or down? And it's always important to follow the general trend. Next is to identify recent major swing lows or recent major swing highs. Again, we'll show you some examples of those. And we want to connect the two extreme points like you see in this slide here. So we're starting in this example because it is a downtrend. So we're starting from the highest point and then ending at the lowest point for a downtrend. And then if it's an uptrend, we're looking at the lowest to highest points. So here's an example of a clear market structure. Okay, so although Fib retracements and all the different Fibonacci techniques can be used in both choppy and trending markets, it's still important to look for clear market structures regardless of what technique you are using. So here's an example of a clear market structure, and here's an example of an unclear market structure. So one of the ways to identify a clear market structure is actually by adjusting the time frames in order to, get a clear market structure for you to conduct your Fibonacci analysis on. Okay, so what may look messy on a M30 chart might actually look very clear on an H4 chart. So if there's too much chaos in the shorter time frames, it doesn't mean that the entire currency pair is not able to be analyzed at that point in time. So it just could simply mean that you need to take a step back or sometimes a step forward to get a clearer view. So in this example, you can see we have a pretty unclear market structure from the 15-minute time frame. So it's quite messy. There's no clear movements in price, and when we change it to the 1 hour time frame, you can see that the highlighted portion has a much clearer market movement. Okay, so there's basically two criteria that you should look out for. Firstly is a clear swing low. So the clearer the swing high, the clearer the trend between these 2 points, and the more accurate your Fibonacci retracement will be. Okay, so I guess now we'll briefly go through what conditions to look out for when we're using the retracement tool and how we can use it on both MT4 and TradingView. So if we have time at the end of this webinar, I will do a brief market analysis. Feel free to let me know if you have any requests in the chat, and we can do a bit of Fibonacci analysis on TradingView as well. But starting off with MT4. Okay, so here's just the layout on MT4 if you're unfamiliar. So now let's zoom into our toolbar. So when you hover your mouse over this option, where my mouse is here, it should say draw Fibonacci retracement. So you just click on that, and you can click on wherever you want your Fibonacci retracement to be. So it should come out looking like this. And if you want to add or edit any Fibonacci levels, you simply right click on the Fibonacci trend line, and then so it's pretty faint over here. There is a red dotted line. Yeah, but this is what you will get when you right click on it. So you click on Fibo properties, and then under the Fibo levels tab, you can then click add, and you can proceed to add whichever levels you wish. Okay, so here you can see, it'll look like this. I click add, and then I've added a negative 0.618 level, which is essentially just minus 61.8%. Okay, so now looking at Fibonacci retracement tool on TradingView. Okay, we have a typical layout. In this case, we're looking at pound dollar for this example. But basically, you click on the Fibonacci retracement tool, which is the symbol with the 4 horizontal lines over here. So you can find this, I think you can find this on the top bar or the sidebar. Yeah. Here you can see I've circled it out. And then after you've connected your Fibonacci trend line, this floating bar will pop up over here. So when you click on settings, this selection box will appear. So you can select any other levels that you wish. So if you weren't here for a previous Fibonacci session, I'll show you guys in a little bit, but depending on which Fibonacci technique you're using, we will look at different levels. So let's say, in this case, I'm looking at all of the relevant levels from negatives to more than 100. And when you're first analyzing the levels, you want to kind of select both negative, mid-range, and above 100 so that we can view all 3 Fibonacci types at once. So this is what I mean here, from minus 61.8 to 161.8. So the negatives are what we call Fibonacci expansion. Okay, today we are going through the above 100s, which are the Fibonacci extensions. So we are using the 127.2 and the 161.8. And next week we'll be looking at the expansions, so the negative levels. And last week, the retracements, we looked at the mid-range levels, so 23.6 to 78.6. Okay, so yeah, we'll go through expansions more in depth in the next webinar. So I'll just briefly introduce these levels now. And if you look at the GIF that I've included here, this is the kind of shape that we're looking for. And this is how exactly you should draw your Fibonacci retracements. Okay, another example here, you can see all the different fib numbers that we mentioned in the previous slide and how it looks drawn out. So basically just take note of the starting point and the ending point of your Fibonacci trend line. So in this case, you can see the general trend that we're looking at is a downtrend. So the starting point is 100%, ending point 0. Okay. In this case, this is also another example, and we can see that price bounced off the highlighted area of 61.8% at the Fibonacci retracement level here. Okay, here's another example. In this example, we're looking at the 38.2% Fibonacci retracement level, and this is in line with the overlap support at the 32544.21. So you can see price bounced off of this highlighted area here. So if you are unfamiliar with what an overlap support is, you can stay tuned for our support and resistance webinars where we go really in depth into overlap and pullback support and resistance. But really briefly, overlap basically means that there are swing highs and swing lows that match up at the same level. Okay, and those tend to be really powerful or really significant levels, especially if they line up with our Fibonacci level like we have over here. Okay, another example here. So here we have two Fibonacci retracements. First one is from the top to the bottom over here. And we have 61.8% that lines up with our 0.92637 level. Okay, and next we have another level, or rather another retracement from the bottom to the top over here. And we have 61.8% Fibonacci retracement again that lines up with the 0.91614 level. Okay, and for this level, we actually have it matching up with two swing lows. So this makes it a pretty significant level. Okay. Okay, just a really brief example of an expansion. So for an expansion, we are looking for a flash kind of symbol or lightning bolt symbol. So here you see in this example, it kind of looks like a lightning bolt with from the arrows. So starting point is here, ending point is point 2. And here we're looking at the negatives, as I mentioned earlier, for expansion. So expansion, we're looking at minus 27.2 as well as minus 61.8. So in this example, we can see the 61.8% lines up with this swing high here. So we're expecting price to bounce off of the 61.8% level. Okay, and we're projecting it to hit down towards the minus 27.2%. Okay, and you can see this is the outcome of that. So you really have confirmation that price is going to hit downwards once price breaks out of your initial ending point, which is at point 2. So that's how you combine a Fibonacci retracement with your Fibonacci expansion, since they both use the same tool, just that we're looking at different levels. Okay, so you can see here, once price broke below our ending point at point 2, we have confirmation that it's going to hit towards our minus 27.2, which it did, and it bounced up nicely from the minus 27.2% fib retracement and hits back up to the ending point, which it normally does after bouncing off either the minus 27.2 or the minus 61.8. Okay. So let's get into this week's Fibonacci extension. So here is an example of price reacting off the 161.8% Fibonacci retracement level, resulting in a reversal. So in this case, extensions, we like to look for Nike tick shapes, starting at the starting point will be here, ending point over here. So we are taking, how you draw your trend line is you're basically drawing the head of the tick. Okay, and the projected level is either 127.2 or the 161.8 like we see here. So price has broken out of the 127, so we're projecting it to bounce off of the 161.8, which it did, and results in a reversal over here. Yeah, before we move on, I'll just show you guys the Forex Army page. Let me see. Okay, so in this website, you can see how exactly you can draw a Fibonacci retracement correctly. So, yeah, basically everything that I've gone through today, last week, or future webinars, most of the information will be over here. So you can see the clear structures that we went through earlier, how you can follow price structure, yeah, and the clear steps on how to draw your Fibonacci retracement, some examples. So feel free to check out this website after this webinar. Yeah, it also goes through Fibonacci confluence, which might be a little bit confusing since we are combining all the techniques. Yeah, so you can see over here, we have a bunch of examples. So yeah, let me just pop it into the chat for you guys. Okay. Now let's look at when does a Fibonacci retracement become invalid. Okay, here. So one of the most common scenarios of this is when price makes a lower low. So assuming you are drawing a Fibonacci retracement from the top to the bottom, or if there are bars on the right that break your ending point, then it becomes invalid. So I think we have a bunch of examples of this later on. Yeah, so just because it becomes negative doesn't mean that it is invalid, because we've already gone through that Fibonacci expansions are negative levels. Okay, but I'll show you guys some examples later on. Okay, let's combine some Fib retracements. So we have three different methods here. Firstly, we have the minus 27% Fib expansion. And this lines up with a 161.8% Fib extension, and then the 78.6% Fibonacci projection. So what we want to take note of from this example is basically the shape of all of these trend lines. So firstly, the extension, you can see the Nike tick. Over here, it's kind of an inverted Nike tick. So the head is here, the gray arrow, and then the tail would be the long black arrow. Fibonacci projection also uses a lightning bolt shape similar to the expansion, so you can use those together. So Fibonacci expansion, you can see the trend line that we are following from the red arrow, and then for Fibonacci projection, we're looking at the black arrow. Okay, and we can see that price bounced off of the Fibonacci confluence area over here. So that's how you use confluence. Another example. Here we have 61.8% Fibonacci retracement, matching up with a 100% Fibonacci projection. So in case you can't see the lightning bolt shape, I've drawn out the arrow. So the yellow arrow here is the Fibonacci projection, And the blue arrow, which is just a one straight line, is your Fibonacci retracement. Okay, and we can see price bouncing off of that confluence area there. Okay, another example here. So here we're using retracement and projection. So the 23.6% Fibonacci retracement is just one line following from this bottom here to the top here. And that is in line with our 61.8% Fibonacci projection. So for projections, it's 3 points. So we have a starting, middle, and ending point. And we can see price testing this level here. Okay. Okay, so let's backtrack a bit and look at how exactly you can use these retracements. So how do you identify clear market structures? Firstly, we want to look for significant swing highs, swing lows, significant trends, or clear market trends. So let's first look at an incorrect example. Here's an example of insignificant swings, which are bad points to use for Fib starting and ending points. So you can see it's really messy, the price movements are too small, and there are no significant swing highs or lows. Another example is over here. So there's no clear swings, no clear market structure. Price movement is too small to use any kind of Fibonacci technique here. So here is an example of significant swings. Okay, we have a clear move up and down. We have obvious peaks and troughs and very clear market movement as well. And here's another example. So I've drawn out the peaks and the troughs to show you exactly how clear it should be. Okay, and following the market structure. So we want to pick market structures with a clear upward or downward movement. So your Fibonacci retracement trend line can follow that movement. And this works better on higher time frames due to there being less noise. So by higher time frames, we mean H1 onwards. So H1, H4, daily, weekly, depending on your trading technique as well. Okay, so you can see this is an example of not following the market structure. So this is how not to draw a Fib retracement trend line. You can see we have a zigzag here, okay, but instead we are drawing a Fib trend line through the price structure, when instead we should be following it exactly. Okay, so when your retracement is cutting through the market structure, it makes it less effective. Okay, so for our Fibonacci extension, getting back to this week's topic, again, the tool that we use is Fibonacci retracement, and the percentages are 127.2 and 161.4. And here we're looking for a Nike tick, like you see in the GIF here. Okay, and these tend to be quite powerful setups. If they don't react off of the 127.2, then we're likely expecting it to react off of the 161.8. Okay, and these usually retrace the entire move from point 1 to 2, hence the retracement tends to be more than 100%. So the clearer the movement of the Nike tick, the better. So you can take a look at this GIF over here. So you can see it did test the 127.2 slightly, but it still broke out of it and reacted off of the 161.8 before reversing back down. Okay. Okay, so another example here. So for Fib extension, in this example, we are looking at it reacting off the 161.8. And then we see a reversal here. Yeah, I think we saw this earlier, so I'm going to skip that. Here's another example. So this is on the daily time frame. And you can see that there is a swing high that's in line with the 127.2. It's quite small. So these, obviously, the clearer the Nike tick, the better. But if you have a small movement like this, that works as well. So if we zoom in, because this is on a daily time frame, so if we zoom in and view the same chart on a H4, we can get a clearer view. Yeah, so you can see here the Nike tick is a lot clearer. Okay, and this is on the same chart. So we can see how price reversed nicely off the 127.2% fib extension level here. Okay, and here earlier I briefly mentioned an inverse Nike tick. So in this example, you can see it a bit clearer. Starting point here, ending point here, and then the tail would be from the 0% all the way down here. Okay, so as long as it retraces 100% of the tick, then it can be considered a tick. You know, as long as it reverses 100% of the V shape, then it's considered a tick. So we want to take note of the swing low support at 0.91565 in line with the 161.8% level. Okay, so this makes it a strong support level where price bounced off of. Okay, so we'll talk a bit more about combining the different fib methods as well as the support and resistance levels so that it increases the accuracy of your analysis. Okay, let's move on. So we talked about invalid Fibonacci retracements earlier. Okay, and I did mention as well that the fib retracements that are negative are still valid. Okay, and this is an example here. So our starting point is here, ending point here. Price breaks our ending point, as we see from this area over here, under the red arrow that I pointed out here. And once it breaks out of it, it's no longer valid. So basically, when it breaks out of your 0.0% level and has made a lower low, that's an example of an invalid retracement. So you want to remember to always pick the lowest point with nothing on the right of the ending point. So your ending point is here. We don't want anything lower than that over here. Okay. Let's quickly get into Fibonacci confluence. We briefly talked about it, but I'm gonna get a bit more in depth into the extensions. Okay, so we looked at this example earlier, but it's basically multiple Fibonacci levels. It doesn't have to be retracement only. As long as there are Fibonacci methods that line up nicely, it's considered confluence area. So you're basically lining up these levels so that you can increase the probability of a bunch of Fibonacci levels working versus a single Fibonacci level working. Okay, so yeah, we looked at this example earlier. So in this example, we have two fit methods. Okay, I mentioned earlier the Fibonacci extension, which we just went through, and the Fibonacci projection, which uses a lightning bolt symbol. So our 61.8% Fibonacci projection, like you see here, lines up with the 127.2% Fibonacci extension. So the Nike tick, if you can't see, the head of the Nike tick is from here, this swing low to this swing high. And because it has surpassed 100% of it, or it's retraced 100% of that, the head of the V shape, then we can use it as our extension. And for our projection, we are looking at this starting point here, middle point here, and ending point at the swing high. Okay, for projections, we use 61.8, 78.6, and the 100%. So here we're looking at 61.8, which lines up nicely with our 127.2% extension level. Okay, and you can see how price bounced off nicely off of that level. Okay, But in this case, you can see it's just the wick of the candlestick that's just touching that area. So we'll go through in a bit how exactly you can maximize your chances of catching this reversal, since it is just a candlestick wick. Okay, next let's look at another example. So here we also have two Fibonacci methods. We're using extension and projection again. Our extension here is not an inverse extension. Okay, so we have the hit, the starting point at the swing high, ending point at the swing low, and it retraces is past 100% of the V shape, as you can see here. So that's why we're looking at 127 and 161.8. Fibonacci projection wise, we are looking at the lightning bolt shape again. So starting point here, middle point here, and ending point here. Okay, so 100% Fibonacci projection lines up nicely with our 127.2. In this case, we can see that our 100% also lined, or rather our 78.6 Fibonacci projection also lined up nicely with the 61.8% Fibonacci retracement. Okay, but it already surpassed that, so it's no longer valid. Okay. Okay. Last example, I think. But basically in this example, we are looking at an expansion and an extension. So for expansions, remember we're looking at the negative levels. So for expansions, we're also looking for a lightning bolt shape. So the lightning bolt shape is like this. The minus 61.8% lines up nicely with our 161.8. So you can see that the minus 27.2 expansion also lines up nicely with the 127.2. So when we identify these two confluence levels, we would first wait for price to break out of this confluence area before going in for buy towards this confluence area here. Okay, in this case, obviously it broke out of it, so we were going for that buy. But if we didn't know that it was going to break out of it, we would first going for buy towards this area here first. Okay. Okay, this is our last example. So in this example, we have the minus 27.2% expansion, which is the blue arrow. Okay, and that lines up with our 100% Fibonacci projection, which is the lightning bolt shape. Starting point, middle point, and ending point, as indicated with the orange arrows. And then the purple is our Fibonacci extensions, or in this case, we have an inverse Nike tick. Okay, so we have minus 27.2, 100%, and 127.2 lining up. So we can see that price bounced off nicely off of this very strong support level. Okay, so normally you would try to get as many Fibonacci techniques as you can lining up at the same level, because that gives us a stronger confluence area. Okay, so it's a more effective indication that price is going to bounce off of that, or reversal is going to happen. Okay, so let's talk a bit about trade management. So earlier I showed you guys how sometimes with confluence areas, you can expect a very brief reversal. So a very brief touch on our confluence area before it starts reversing off of it, especially when you have a very strong confluence area with multiple Fibonacci levels lining up on it. So in order to avoid missing your trade, this is the trade management technique that we like to follow. So firstly, your stop loss will be placed beyond. So this means that you would place your stop loss beyond a key Fibonacci confluence area. So the reason for this is because more often than not, price is attracted to such strong areas of confluence, and if your stop loss is right before instead of beyond it, you will most likely get stopped out before the market reverses. So that's basically what I mentioned earlier. In this example here, um, we're going in for a buy. Okay, so our stop loss will be placed below your Fibonacci confluence. And your take profit, we recommend you to place it before. So in this case of a buy entry, we would place our take profit below the confluence area. Okay, obviously these will be switched if you are looking at a sell entry. But yeah, basically the standard rule is that stop loss will be placed beyond a key Fibonacci confluence area and a take profit will be placed before it. So before means that you should place your take profit, in this case, below the confluence area. Reason for this is because when price reaches the confluence area, there's a high chance that it will not be able to go beyond it. And instead of reaching your profit target, it might reverse back to your entry or even worse, your stop loss right before it reaches your take profit. Okay, so that's also one of the reasons why people complain that the market is being manipulated because they miss their take profit by 1 or 2 pips. Okay. Okay, let me know if you guys have any questions. We still have a bit of time. So I'm gonna pull out my charts, and if you guys have any requests for any currency pairs you'd like me to go through, feel free to pop them into the chat. Okay, I got a request for DOW30. Let's go ahead and look at that. Mm, can you just really quickly drop the ticker in the chat? I can't seem to find it on TradingView. Is it this one? Is it this? Okay, let's go ahead and analyze this first. Can you guys still hear me? Okay, let's continue. So, let's start off by looking at it on the higher time frames. Okay, so okay, we can see a general downtrend on our daily time frame. Let's look at our weekly time frame. Okay, weekly time frame is pretty bearish as well. Okay, okay, I'm just gonna go in and add some support and resistance levels. So here's our first resistance. Here's our first support. And here's our second resistance. Okay. Okay, let's look at our 4-hour time frame. So we kind of have the same levels here. This is our first support. Yeah, okay. Okay, let's look at Dow Jones. Okay, so same thing, we're gonna look at the higher time frames first. So it's pretty bullish, okay, on our weekly time frame, on our daily time frame as well. Okay, here is our first resistance. Okay, this is our first support, and I think this would be our second support. Okay. So if we're looking at our retracement, we're looking at the mid-range first. So we have these 5 levels, 23.6 to 78.6. And I can see that my 38.2 lines up nicely with my first support. Okay. Let's see. Okay, let's look at this on our 4-hour time frame instead. Okay, it's pretty similar. Okay, now I'm gonna look at a projection. So for projection, we use these 3 levels. Okay, and okay, actually here I can show you guys an example of a Nike tick. Okay, we're looking at the above 100 levels. Okay, so 127.2 and 161.8. And you can see the shape of the Nike tick here, right? So it's surpassed 100% of the V shape, which is why we can use it. And you can see price actually rebounded off of the 161.8 level, just as we suspected or would expect. Okay. So yeah, that's an example of the Nike tick or Fibonacci extension that we went through today. Okay, let's see. So because of that reversal of the 161.8, we can expect it to continue to go down towards this level now, which is our 23.6 level. Okay, so I might just put an indicator there. Let's see if we have previous levels. Okay, kind of have this level here as well. This would be just an intermediate level, okay, that I'm expecting price to hit towards. Okay, now let's look at some indicators. So I like to start off with Ichimoku and MACD. So if price is moving below the Ichimoku cloud, it is a bearish signal. And if it's moving above, then it's a bullish signal. So in this case, we see price moving above, so it doesn't support our analysis that price is going to drop down to this level here. Okay, so I'm going to get rid of that. And MACD, you can see that it does support my analysis. So I can keep that. And let's look at RSI and stochastic. RSI, you can see very obvious downtrend. So it also supports my analysis. Let's look at stochastic. Okay, stochastic as well. Okay, let's look at maybe Bollinger Bands. Okay, so you can see that on our Bollinger Band, price is moving out, or it's breaking out of the bottom band of our Bollinger Band. So it's also supporting our bearish analysis. Okay, so out of the 5 indicators that we've used, 4 out of 5 of them have given us a bearish signal, which supports our analysis. Okay, so because there are so many indicators, 50% of them will give you bullish and 50 will give you bearish. So it's important to just learn a couple that you're comfortable using, that you know how to use, and then stick with those. Use those interchangeably to support your analysis. And yeah. Okay, any other requests? I think we have time for maybe one more. Okay, no worries. Okay, let's look at gold. So on our weekly time frame, it's pretty bullish, right? On our daily time frame, also pretty bullish. Okay, there's not a trend line, but let's see if we have a trend channel. Okay, I think we can see price breaking out of the trend channel. Okay, we might see it break out a bit. Okay, let's go in really quickly with some levels. So this is our first resistance, our first support, and our second support. Okay, on our 4-hour time frame, Okay, I'll just show you guys an example of a Nike tick again. Here, okay, you can kind of see this Nike shape or tick shape. Okay, and you can see it bouncing off of the 161.8. Okay. Yeah. And okay, so this would be my first resistance. This is my first support, and then my second support here. Okay, so going in with a projection again, it's in line with my 61.8. Okay, my 38.2 lines up with my first resistance. Okay, and okay, I think that's about it. Okay, so my 23.6 also lines up with my first resistance, and so does my 61.8. Okay, so we have this confluence area here. And this is also a pretty significant level of overlap, okay, because we have a bunch of swing lows lining up as well. Okay, now let's pull out some indicators. Okay, price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD is also giving us a bearish signal. If we look at RSI, okay, RSI isn't telling us much. Let's look at stochastic. Oh, okay, so we have a bit of divergence here. So price has made a higher high on our price chart, whereas on our stochastic, it's making a lower low. So this is a bearish divergence and could suggest that price is going to continue to break below our first support. Yeah, but we'll have to see because this is a pretty significant level here. So you might see a bit of a jump. Okay, if I zoom in, you can see price already increasing here. But ultimately, because of all the downward pressure, we might see it continue to drop below the first support. Okay, maybe let's look at moving averages as well. Okay, so the SMA and EMA price is moving below both of these indicators and it recently crossed over each other, which could suggest a change in trend. And it's been pretty uptrend recently, and now we're seeing a downtrend. So that could be because of that. So also supports our bearish analysis. Okay. Okay, I think that's all the time that we have for today. Let me see if we have any other questions. Okay. Okay, if there's nothing else, thank you guys so much for joining me today. I hope you guys found it helpful. Have a great rest of your week, and I'll see you guys next week. Bye, everyone. Thanks, everyone. Bye.